What is going on, everybody, and welcome to another weekly update. And in this video, what I'd like to provide you is upcoming earnings, events, Feds, meetings, whatever the case is, to get you prepared for the upcoming week. And I also do daily updates to get you prepared for the day as the market does turn on a dime. And considering the current market sentiment, it is quite useful. So, if that sounds like something you're interested in, consider subscribing. Now, there is a lot to unpack over the past week. I'm going to go ahead and throw this up real quick. Um, but before we go over this, it's important to kind of understand what is leading into this upcoming Fed meeting. Yes, we do have the Fed on Wednesday. So we'll get the rate numbers at 2 p.m. Eastern Standard Time on Wednesday, and then we'll get Fed member Powell following up with fielding questions at 2:30 Eastern Standard Time, which will be very historic and very pivotal at this point. Now, if we go back about a week and a half ago, we had core CPI come in, which actual was at 5.9 versus forecasted 5.7, previous 6. So this is what is interesting, right? You also had headline uh, inflation as well that came out at the same time. Now, the difference between core and headline inflation is that headline inflation involves energy and food compared to the core, which removes those two elements. And why this is because food is very volatile, but also something to consider too is that the core CPI still really matters. And I know the Fed doesn't really go off a core because it's unpredictable, but you have to understand energy and food are the drivers of essentially everything, right? Just everyday life. And if that's well above 8, that's what matters. Yes, the core is come down a little bit, but your food and energy are through the roof. That is primarily because you have concern of recession, right? It's primarily a concern because people aren't out buying stuff, right? So this is a good reason why people are fearful. This is a good reason why there's a difference between core and headline inflation. Because when people are fearful of buying stuff, yes, the demand comes down, so your inflation will come down. But that also means people are purchasing the necessities. And necessities, your food is going to skyrocket, your energy is going to skyrocket, right? And so people are looking for entertainment, things that they have, right? So they'll stay at home more. So energy will be consumed more there, or going out on trips, whatever the case is, right? So energy is consumed a lot more. So that is what is important to understand here, and why it's very critical the next couple what happens this week, but not only this week and looking into the future. Now, I do believe that we could potentially be bullish coming up very soon towards the end of the year, but if we are not, is what's concerning. If we continue to have inflation run during the fall, this could get even uglier than I potentially forecast. So, with all that being said, things to consider here. We had the ECB on Thursday, right? They came at 50-point basis move. This was originally estimated to only be a 25-point basis move. Now, understand that the ECB hasn't raised rates in like 11 years, right? That's a big deal. That's the ECB, and they can't raise it at a fast pace, because if they raise that at too fast a pace, they could essentially completely cripple the whole system, the whole financial system. So you have to understand that, and understand that the last time they raised rates, the market crashed. Not to say that it's going to crash, but understand that the last time they did this, the market crashed. And coming from no rate raises in 11 years to a 50-point basis move after estimating a 25-point basis move is a little bit of a concern. So this is why we need to get understanding, grasp what we're coming into this week, and why it is very pivotal week on Wednesday. Understand that I think they'll come in at least to 75. The Fed futures aren't so high on a 100-point basis move because some things have been good, but understand this too. You're seeing a lot of layoffs. You're seeing a lot of people stopping hiring. You're seeing your big corporations, right? There's a reason they stock split. There's a reason that they're dialing back. And we had Tesla earnings this past week, which was really it was really shocking. Yes, they did beat expectations, and people are running off of hopium right now. But you have to understand, there is a lot of cracks in Tesla. Tesla, one of the best companies currently right now, especially during the pandemic. They did outstanding during the pandemic, and now you're seeing cracks. That's concerning. Um, and then you also had Netflix this past week, and this is something to keep in mind. And this is why I say the market isn't what the economy is doing either. So it's right now it's very hard, and why it's very critical for everyday updates, because Netflix currently right now, um, they started running off the fact that they lost 1 million subscribers. Uh, Considering that the dollar was so high, right? They made out. They were one of the few that were able to make out because of a strong dollar. So with that being said, we have it's actually the biggest week in earnings. We have a lot of big tech this week. Tuesday, you got Microsoft and Google. Wednesday, Shop, Meta, aka Facebook. And then you got Thursday, you got Apple and Amazon. Now, this is just some of the big ones I am watching. I'm not watching all of them. There's a lot. There's a lot of earnings this week, a lot of very big earnings this week. So you're going to see a lot of big moves. But one thing you need to be mindful of and be very careful of is that they've priced in a lot, because you also have the Fed. Um, and when you have the Fed, when you have pivotal events, the market will try to price it in, and especially with the craziness that's been going on. Right, the general index is trying to price in a 96-point move, and so if you play options, you can get wrecked pretty hard, because you either have to play really close to the money, or or not even play at all, or play equities, right, or play shares, is going to help you during this week, considering what's going on and the events that are currently going on. Or potentially just sit out, right? That's always cash is always a position, is always something to say. So again, very big earnings watch list. I got a couple different ones. I got Tesla. I want to see if there's a continuation on that, technical wise, which I want to get into some technicals, because there's some things that we need to kind of go back over again. But Tesla, 52-point move. ASML chip just had earnings, 28. BA looks like a really good short, to be honest. 10-point move to the downside. JPM, 4-point move. JPM, again, I don't play financials, but I like to kind of keep this up here so you can kind of gauge and see the number every week is important, because if that number like changes bigger, that means that there's events coming up that you may not be aware of, right? But the market is trying to price that in. You got coin at 10. And in considering the way Bitcoin's been running, I want to kind of see how that plays out as well. This could be potentially a good move, a 10-point move to the upside or to the downside. It really just depends, I think, this week on the Fed. The Fed is really going to gauge what's going on. Now, let's get into the general index. Something you want to be mindful of, and I talk about this all the time, and I've seen this on Twitter. I've seen this on a lot of different places. And people calling a breakout. That's great. When has a breakout worked at all this year? Every breakout we've seen has broke right back into the channel and started selling. Not saying that it can't reverse. It very well could. But you have a big event with the Fed. If the Fed comes in at a 100-point basis move, even a 75-point basis move, I can see us still running on a 75-point basis move. It's not unless they come at a 50 or lower do I think this whole thing, this black cloud that's lurking over us, is going to start turning around. If it comes at 75 or higher, that I think that black cloud is going to linger, and you got to be very careful about that, because again, it could get very nasty very quickly, and we're already seeing a lot of cracks. And to just ignore those cracks like it's nothing, again, I understand the stock market is not the economy. A lot of the bad news is starting to wear off, but you have to understand that if the Fed continues to raise rates, that's going to drive, or that could potentially drive more fear and drive us right back down to those lower levels a given Wednesday. So, and then the market could potentially start selling off just to try to match what they potentially see, because our 75-point basis move is sitting around the 38.52. That's what they come in at. There's been a lot of whispers of a 50, so that's potentially why the market's up at the 50. But with that all being said, the market needed a rally. It got a rally this week. right? And it went parabolic. This is straight parabolic, trying to because this is something I talk about all the time. Every earnings cycle, you get a pre-earnings run, and we have had bad news after bad news after bad news. So all these potential earnings runs sell off, earnings runs sell off, right? And then now, where we're getting a pretty solid earnings run here, potentially even a pickup to the 40-60 coming into this week. Something I'm seeing is we could push to here by Wednesday. Market try to price it in, and then if we get 50 points or lower, I think the market will take that positive and saying, okay, well, we've hit peak, we're good, even though the numbers aren't saying that, and it can be delayed. I get that, but you have to understand that the companies have a better guidance than the Fed does, and they're still making layoffs. They're still doing a lot of different things, which is very concerning. So even if we do get a 50-point basis move, we could potentially rip back up, maybe even back up to the 4,200. If not, if we get bad news, could be sitting here by Wednesday, and then just start selling back to 75. Again, the market will adjust to where the Fed coming at 75. I think we could potentially revisit that 36.64. Again, if we get 100, this thing is really going to sell pretty heavy. I have the 100 point around the 36.36. I don't know if we'll reach that point. Because again, if we break this point, you're going to start driving fear of a recession. There's a lot of stuff that could potentially get worse. But again, something else to add. One thing that did happen this week is the oil maintenance is going on, and people were concerned about Russia shutting off the pipelines. They turned them back on, so that was a very positive thing, because that could have been very nasty very fast. To understand, it takes one event and then things can dramatically change. So just be mindful of that. And so that's kind of what I'm looking at here. So watching those levels again for 75-point basis move, we're looking at 38.55. Again, if we're looking at 50, we're looking at roughly at that 40-60 mark, and then 100-point basis move is that 36. The Fed futures have been pretty right on. Even the Fed futures for the ECB were right on at 50. So I can keep a watch on Fed futures and see where they're at. Again, that 100-point basis move kind of really come down, but ever since the ECB, it's kind of pumped up a little bit. So we have to see. If this is in preparation for a 50-point basis move. Obviously, we won't know until after the fact if it was a move for a 50-point basis move, because that's what they think the Fed is coming in at, or if the market's just getting numb and starting to push. Even though have we hit a bottom? Again, I don't like calling bottoms. I don't like doing any of that. Even though since we have broken, I've been saying that it's probably a good time to DCA into stuff slowly. Because again, this thing could get very bad very quickly, and understand a recession on average declines the index about 41%. Not to drive fear, but again, I think this recession would be different. I think this recession would be short-lived, but time will tell. This is why every piece of information and data is critical, and why there's so much volatility in the market. So with all that said, let's take a look here. I want to actually take a look at the dollar real quick. Right, the dollar is still, it's been holding this level, this 106 level. This is the 20 EMA. It's been holding it very well. Unless this actually breaks, again, even the daily, it's actually looked like it was breaking on Friday and then pulled right back in. That's what's concerning. If we get a continued strong dollar, they could start sinking the market right back again. It really just depends on what the Fed come in at, and if the market is looking good in index, it's just something you have to watch. If the companies are reporting good earnings, and the inflation continues to rise, they'll just keep raising rates. And again, normally it's not that big of a deal. Raising rates are not that big of a deal, but when you do it at such a fast pace, when you come from extremely zero, right, and to all the way up to where we're at now, and continuing to push rates, that's an issue, right? The pace in which we are moving is too fast for the economy. To understand the economy moves slow, right? And there's a reason why the Fed moves slow. There's a reason why the Fed doesn't introduce stuff, because you introduce panic. People get panicky, right, when it comes to things. And so you have to be careful of that. So the dollar, again, if it continues to hold here, I think we're going to see another big leg in the dollar to the upside. But I think it's everything is kind of consolidating and waiting to see what happens with the Fed on Wednesday. So you need to watch the dollar. Bitcoin had a big week. Again, another breakout. I know everybody's talking about a breakout, but something I've been talking about is we haven't retested this support. And now everybody's like, okay, well, this thing can just run straight back up to 3,600. We haven't retested, right? We broke this 28 level, 28K. You could possibly even push it to 29K, right? You have a 29K break up here, which was a very strong support, and we held for a very long time. We haven't retested it. We haven't had a first time retest. We just sold off and then consolidated. So you have to be very mindful. I think we do have some headspace, right? I think if the Fed come in at 75 or 50, the market might be like, that's great. It's coming down, and we might actually get a pretty strong rally back up to this level. We have to understand, if the next report comes out and it's even higher, you're going to drive fear, and that's going to be straight panic. Right? It could be over 10 at that point. And we're talking about a headline. Yes, there's a difference, but the headlines at this point, it has more weight than the core, because if the food and energy continue to skyrocket, people don't care about entertainment and all that other stuff, right? People care about the basics, and that's what's the concern is. You can't go and buy food because of the fact that inflation is just straight out of control, and taking all the extra funds that people had for entertainment. Also, this is one thing to consider and very concerning is credit cards. Credit card companies are reporting a massive, I think it was 30% increase by American Express. And their concern is that it's going to increase very dramatically over the next couple of months. That is the concern, right? And so you have to understand that this is why food and energy, the headline news is important. People like to dismiss it because it's volatile, but it's pushing up at a very rapid rate, and that is what is concerning, and not stopping at all. And so that's why you'll see the setback in core. To say, hey, the core is not as bad, yes, but to understand that the headline is important, because that's what people need to survive. So we will see there. But Bitcoin, I think Bitcoin's going to continue to follow the market until we get some kind of normalcy, and that's not happening anytime soon. Although it can change in the next potential quarter. Again, the next quarter I think is going to be pivotal as well. This week is going to be very pivotal, but the next quarter I think is going to be telling if this thing is going to continue or not. So again, it's going to be long and drawn out. Now, the next thing, I just want to mention that oil is still sitting at $95 a barrel. So that's important. That's not coming down either. It doesn't really matter if it's not driving up, but if it's sticking around $100, is not great either. And then Tesla. So this one could be really interesting. Had a massive rip. Again, there's a lot of cracks here, but the thing is things estimations are so low that anything is like a positive, which is great. It's just how the market works. But you have to understand that there's some major issues going on here that you're not going to see now, that we may see in Q3. So Q3 might be more telling on if this thing's going to run away or not. Again, we thought we've hit peak inflation, and that's where we started to run, but then things changed, and that's not the case. And you have economists that are off. They are way off. And there wasn't a single economist that got the last core CPI right. So just be mindful of that. Tesla, good spot. It had a massive rip. It hadn't retested, but Tesla likes to run. So I'm watching this 828, especially if we have all that headroom next week. If we can open above the 828 on Monday and hold this level, I think we can get a nice rip, potentially up to 950 during the week. Again, you have to be very careful Wednesday. Wednesday is going to be a very pivotal week. Is the market going to sell because of Wednesday or not? That's the question. Or if we start selling on Monday, watching this 758, does it hold the 758? Could be a nice support level to bounce. Right? You don't want this thing to just go parabolic. If it can pull back and retest old support is what you want to be watching. That makes the move a lot stronger as opposed to just going parabolic. Because it goes quick up, it's going to come back come down twice as fast. Excuse me. So definitely have to watch that. So I'm watching that. ASML is the other one. ASML. So this one, another breakout here. Really kind of watching this one here. This one could have another move. It's going for a 28-point move retest. I think we can actually come back down to the 515 mark. If it can hold the 515 mark, I think we can get a nice chance up to the 579 mark. So I really want to keep ASML on watch. I do like ASML a lot. The chips have been doing really well, and that's good. And I like that. As long as the chips do well, I think the rest of the market can do well as well. Again, banks are critical. Make sure the banks don't give out, which they started to give out on Friday, which is not a good sign. But again, ASML I think could have some strong potential. And again, you look at the daily, something like you're talking about, even though it's breaking, you broke here and you sunk right back in. So you can't go off of pure technicals this year. Technicals this year have just not been working. Again, why is supply and demand? So watching that critical level on Monday. If the market does hold, I think it doesn't really matter. You're just going to look for the big movers, and then watch those ones rip all week. But we're going to have to wait on Wednesday and see what happens. And then BA is the other one I have. BA I think could be a really good short. We have an ascending wedge here. So if we break below this 157 mark, if we open below this, I'm looking for a retest on this, and then potentially even going for a good short. This could be a good short, I think, down to 147. You have support there. Now that's the EMAs. Your support on the candlesticks can be different, right? You could potentially drop even a 141. So really watching this one closely as far as to the downside, I think could be a good downside play. So watching BA. Again, if your value starts giving up, that means the rest of it could potentially start giving up. JPM is the next one I have. JPM looks like junk, hot junk, but nonetheless, every time it tries to break this 115 mark, it continues to sell off. I don't like the fact it's consolidating down here. If the Fed gives some bad data, this thing could break and potentially fall to 104. I think it's a strong possibility. I think even if things, worst case scenario, I think we have one more bad leg down. Is it going to be another 25 points? I don't know. It's hard to predict that kind of stuff. You really need something that's going to drive fear. Recession could drive quite a bit of fear, especially if you're talking about food shortages and food problems and energy issues. Those could be huge things, as those are primary things that drive everyday life, not your entertainment, not all these other things that are separated from core. So with that all being said, JPM, watching to see what that does. A coin, I do want to mention this just because of the way Bitcoin's been moving. Had that nice rip that could potentially mean a nice push to the downside if this thing doesn't hold. If coin can't hold essentially this 74 here, this thing could have a nice rip back down to 61. So you're looking at a nice downward play here. And then again, if the market really starts getting crazy, you could potentially go all the way back down to 50, 54. But if it does hold, you do have some resistance here at the 82 mark. So it could be a nice play to the upside, and they got another 10-point move there. But if it does break this 83 mark, then you got a bigger move up to the 96 mark, 100. Again, psychological numbers, round numbers, 100 mark, you get a hard rejection off that, the first attempt. Again, you're starting to come back into first attempts. So you have to realize that this thing isn't just going to rip. And now if you're playing intraday, that's great. If you're holding for investments, it's good with equities because you could enter here essentially roughly around the 83 and then put your stop right around that essentially at 68, and then if this thing does break up, you just move it up and then move it closer when it gets to 100 points. And then if it does reject hard and doesn't come off and continues up, then you can just keep moving that stop up. But nonetheless, you're coming again into a lot of first attempts on old support, and you're going to get a hard rejection. That first one is always a hard rejection. Then after that, you could catch momentum to start moving back up to the upside. And again, if it just breaks through and is pure parabolic, you're playing with fire, because it's only a matter of time before that thing starts selling off heavy. So with all that being said, that's pretty much what I got. It's been a long video. Hope everybody enjoyed. There's a lot going on, a lot to unpack, but that's what we're here for. So with everything being said, go ahead and drop a like button. Until next time, I'll see you guys later.